Welcome to Wealthion. I'm Wealthion founder Adam Taggart. Know me. Thanks so much for joining us today.
Thank you so much for having me here.
It's a pleasure. Great to have you back on the program. Can't wait to talk about your new book. I see it everywhere over the internet these days. Real quick, right before we get to it, let me just ask you my general starting off question just to set the stage here. What's your current assessment of the global economy and financial markets?
We've certainly seen uncertainty in the markets in different types of sectors, but I also think that once the Federal Reserve hits pause, which I believe it will in the middle of next year on its interest rate hike policy, a lot of the money that's come out of the markets that's on the sidelines will actually come back in. We've seen bits of this with the will the Fed say this? Will they do this? What's Powell going to really mean over the last number of months? I think that continues towards the beginning of next year, maybe the first half of next year. But ultimately, we are going to see a reduction in the pace of rate hikes in the U.S. and around the world, and then we'll see a pause next year. And then I think during the following year, which is election year again, 2024, we're going to see rates easing if we don't see more quantitative easing between now and then.
Yeah, there'll be some continued market dyspepsia as the Fed continues to hike, but at some point it's going to pause. That's going to bring money back into the market. So you don't necessarily see a, total catastrophic collapse in the markets. It sounds like you see actually a period once the Fed pauses where market prices may get supported and start rising at least.
Yeah, I see that. And again, on the flip side of that, or the sort of real economy side of that, I don't see the two keeping up with each other again when that happens. That is part of permanent distortion, this idea that there's other factors that relate to money that are involved in the markets, obviously, that don't make their way into the real economy. And that's on the upside of the markets, the downside of the markets, that the economy either way is lagging. And I believe that we're in for a period of that as well.
The economy and high finance do coexist, but they don't have much to do with each other when you dig beneath the surface. This is just what we were talking about. Money is the obvious divider. The reality is that money, like a virus, will always seek the easiest way to reproduce itself. And that's the problem here, right? That money has been reproducing at a much faster rate than the real stuff that it's a claim on, correct?
That's exactly right. And there's the sort of timeliness of the pandemic and the fact that I equated money with a virus, because that's the reality. Like money looks for hosts, right? And money looks for, if we consider it as an abstract, the places where it can multiply the quickest with the least path of resistance. And the reality is that money in general can, even when the markets are down periodically, money can reproduce itself more quickly in the financial markets and the financial asset markets than it can in the real economy. There's so many more things that have to be in place for money to manufacture money off of itself in the real economy, that the easier it is to flow elsewhere and the more fabricated it is in recent times from the standpoint of the central banks, and to a much lesser extent, the fiscal policy of the government during COVID. But all of that creates more and more of a chasm as to how money is created, where it goes, and specifically also where it doesn't go, which creates this permanent distortion between the two.
Right. And that's a great point to make, which is if the economy were self-funding something, right, like development, like building bridges and stuff like that, in theory, okay, we'd have to have people and companies go out and do things to make money, and then we'd have to tax it, and then we'd have to collect those tax revenues. And whatever those tax revenues are, that would place a limit on how much we could invest, right? Whereas, U.S. government could just sell a bunch of U.S. treasuries to the Federal Reserve and then just get that instant money, and voila, we have a stimulus package, right? So it's so easy to sort of conjure money on the financial side of things than to actually wait for the real economy to produce it.
Well, that's absolutely true. But beyond that, with respect to, just take the fiscal package, the fiscal packages that were created by the U.S. and other governments in the wake of the pandemic, the reality is that the Federal Reserve created more money than what was on offer through those fiscal packages in general. So what happened was, even if you add up, and I look at the stats on this in my book, in Permanent Distortion, if you add up, all of those $600 paychecks, the extra unemployment insurance, the money that backed the PPP loans, you literally add all of that up, it's still only a fraction, around 20% fraction of what the Fed created sort of in that same time period.
Let's talk about the potential systemic economic fractures. What's on your hit list there as like potential candidates? Where are the worry spots for you?
So for example, right now we've got debt as a major worry spot in a number of different ways. Basically, Treasury borrows money. Banks are the primary dealers to sell that borrowing or that debt to the rest of the world, other central banks, pension funds, et cetera. And then they sort of give it to the Fed in return for cash for which they don't have any accountability. And then the Fed holds the bonds on their books, whether mortgage bonds or Treasury bonds, all connected to Treasury debt. So the government is being monetized by the Fed, not just our government, governments around the world. In countries that are less stable economically, where they have to borrow more and their currencies are weaker relative to the growth of their economies and the health of their consumers and their citizens, that becomes more and more of a problem to pay back.
We're now, 14 years down the road? Not that long. We are 3.5 times that balance right now.
It's amazing. I mean, it's amazing. And you can't really attribute all of that to COVID, right? I mean, there's a lot of other things at work here, all of which point to the fact that our economy is not growing enough to effectively pay into the government enough to create any sort of stability in the budget. And again, this is not just our country. This is going on throughout the world.
Is there anything about the book and your conclusions in it that we haven't talked about yet that you'd like to impart to those people, either on hey, these are things that you should do heading into a future of permanent distortion, or hey, here's some more positive aspects walking into the future than we've had a chance to talk about here?
We didn't talk about sort of the last section of the book, which I have called Metamorphosis, which is really what's happened on the side of, for example, decentralized finance, people doing more of their own individual investing. It is, or their idea of meta, it's the idea of actually technology that uses meta reality, AR and VR, to make our lives better. To allow that surgeon on one side of the world to develop, medical practices that can be used in a virtual way with someone on the other side of the world. So I talk about that as an area that I still believe has a lot of growth ahead of it. And I mentioned decentralized finance and new money, where, again, I think right now there's a bit more uncertainty in that area from a standpoint of crypto or Bitcoin, but there's certainly more evolution that will be happening that will allow people to invest in that space and also use it for their own purposes.
What is your level of enthusiasm about us as a society being able to use decentralized finance as a way to sort of disintermediate the existing stranglehold that the current Wall Street system has around the financial system? Like, will it give us an opportunity to level the playing field better and take it out of the iron claws of these guys that have controlled it for so long?
I absolutely, on a 5, think it is a way. I think just from the standpoint of where it is right now, there's obviously a lot of volatility in it. And I do think it needs more of a set of regulations, not necessarily for the currency itself, but just to keep people safe from the standpoint of sort of more nefarious elements of whoever can pop into that field. However, I also think that we have to, in order for that to become an actual thing, need to have more people engaged, so that will create a situation where the volatility of, and I'm talking about Bitcoin really more than the rest on the crypto side, but I'm also talking about decentralized financial platforms that kind of have their foot in both doors, but can go either way. Like, I'm not going to mention names of stocks, but platforms that allow one to do all of their finances that they do regularly anyway with the big banks, as well as investing, and to be more proactive. I think those areas are, I'm very positive about them. And I do think the more we can engage with each other and on platforms that are disintermediated from the rest of the financial system, I think the more equal the money flow will be across society.